Computer-assisted audit techniques are specialized software tools that help auditors analyze data electronically during an audit. Instead of manually reviewing records, auditors use these tools to perform tasks like data extraction, sampling, and analysis directly from computer systems. This allows the IS auditor to work independently and more efficiently, especially when dealing with large volumes of data. One common type of computer-assisted audit techniques is generalized audit software. GAS helps auditors automate key audit activities such as testing transactions, comparing files, verifying calculations, reconciling data, and identifying unusual patterns. Example: an IS auditor auditing a bank's loan system can use generalized audit software tools like ACL or IDEA to extract all loan transactions over $10 million, check for loans without approval, or identify duplicate customer accounts. Instead of manually scanning through thousands of records, the auditor can perform these tests in minutes with accurate and reliable results. Overall, computer-assisted audit techniques and generalized audit software improve accuracy, speed, and coverage of audits, helping auditors detect errors, fraud, or control weaknesses more effectively. Continuous auditing, CA, is the use of technology to perform audit checks automatically and on a regular or real-time basis. Instead of waiting until year-end, auditors use software tools to test transactions, controls, and processes as they happen. This helps detect errors, fraud, or policy violations early, improving audit efficiency and accuracy. Example: an internal auditor sets up a CA tool to automatically review all expense claims submitted by employees. If the system finds claims that exceed policy limits or are missing receipts, it immediately alerts the auditor for follow-up instead of waiting until the next audit cycle. Continuous monitoring, CM, on the other hand, is carried out by management to keep an eye on day-to-day business operations. It tracks key performance indicators, KPIs, control effectiveness, and unusual trends to spot risks or opportunities for improvement quickly. This helps management take corrective action before small issues become major problems. Example: a company's finance team uses CM dashboards to monitor sales and payments daily. If the system detects a sudden drop in sales or late payments from key customers, management is notified instantly to take action. In short, continuous auditing is auditor-driven and focuses on independent assurance, while continuous monitoring is management-driven and focuses on ongoing control and performance improvement. Both rely on automation and data analytics to strengthen governance and risk management. 1. System Control Audit Review File, SCARF. Embedded Audit Modules, EAM. These are audit routines built directly into an organization's systems. They automatically collect data about transactions or activities for later review by auditors. Example: in a bank's loan system, an embedded audit module flags and records any loan approved above a certain limit without dual authorization. The auditor can later review those flagged transactions. 2. Snapshots. A snapshot captures the state of a system at a particular moment during processing, like taking a photo of the data flow. This helps auditors trace how input data is transformed into output. Example: when an insurance claim is processed, the system takes a snapshot showing the claim details before and after calculations. The auditor can verify that claim adjustments were correctly applied. 3. Audit hooks. Audit hooks are program triggers that alert auditors instantly when specific conditions occur, such as suspicious or unauthorized activities. Example: in a payroll system, an audit hook sends an alert to the auditor when a terminated employee is added back to the payroll database. 4. Integrated Test Facility, ITF. ITF involves creating a small fake section within the organization's live system with dummy transactions. This allows auditors to test system controls without affecting real data. Example: an auditor creates a dummy vendor in the procurement system and processes a test payment to ensure that approval and segregation of duty controls work properly. 5. Continuous and intermittent simulation, CIS. CIS continuously monitors transactions in real time, comparing them to predefined control rules. If any transaction breaks a rule, it's flagged or stopped immediately. Example: in an online banking system, CIS can automatically detect and block transfers above a threshold to suspicious accounts until verified by the fraud team. Together, these tools help auditors test controls automatically, detect irregularities quickly, and ensure continuous assurance over system activities. Artificial intelligence, AI, and machine learning, ML, are smart technologies that allow computers to learn from data and make decisions or predictions without being directly programmed. In auditing, AI and ML help auditors handle large amounts of data quickly and accurately. Instead of checking a few samples, these tools can review 100% of transactions and highlight unusual or suspicious ones. Example: imagine an auditor reviewing thousands of expense claims. AI can automatically detect patterns, like repeated claims just below the approval limit or expenses submitted on weekends, which may indicate fraud or policy violations. AI also helps with automating routine tasks such as data entry, document review, or report generation, freeing auditors to focus on judgment, risk analysis, and recommendations. Example: during a financial audit, AI can read and summarize hundreds of contracts or invoices to identify missing approvals or unusual payment terms, which would take humans days to do manually. Machine learning improves over time. It learns from past audit results and gets better at predicting risks or spotting control weaknesses. Example: in a bank, ML can analyze past fraud cases and continuously refine its ability to detect similar suspicious transactions in the future. In summary, AI and ML make audits faster, smarter, and more accurate, helping auditors detect issues early and provide more value to management. Let us go through how AI tool helps the auditors throughout the audit stages. 1. Audit planning phase. AI helps auditors identify high-risk areas before the audit begins. It uses predictive scoring to assess which business units or transactions are more likely to have problems. Example: an AI system can analyze last year's audit data and automatically suggest focusing this year's audit on departments with repeated control failures or financial anomalies. 2. Fieldwork phase. During fieldwork, AI can test all transactions, not just samples. It detects unusual activities, such as duplicate payments or fake vendors, and continuously monitors control effectiveness. Example: in a payroll audit, AI might flag employees receiving payments after resignation or suppliers being paid twice for the same invoice. 3. Reporting phase. AI helps summarize findings in plain language, display real-time dashboards, and even prioritize recommendations by severity. It can also predict future risks based on current trends. Example: after analyzing audit data, AI might highlight that poor access controls today could lead to data breaches in the next quarter.